Okay, let's take a look at finishing our Ken and Amy Booth problem. And we were on the Schedule C. We had put in all the sales, the cost of goods sold, and various other things. So we have very little to finish up here, and then put the tax return together. Okay, so we had put in all the expenses. Now we just need to total up the expenses on line 28. And so that equals 137,988. Then we took our gross income from line 7 and subtracted out the expenses from line 28. And that gave us a loss. So notice the parentheses, or you could put a negative sign. That gave us a net loss because our revenue, 135,660, is less than our expenses, 137,988. So we have a net loss. Now, if we have a net loss, we have to answer this question, line 32. Okay, it says, check the box that describes your investment. So what that means is this Amy's money that got lost? Or did someone else actually pay for the business to be in place? And Amy's just running it, but, you know, it's not hurting her. It's hurting somebody else that's lost. Well, this is Amy's own money that she put into this, and so we're going to check the box, all investment is at risk if there's a loss. Okay? So our Schedule C is now complete. We do need, it tells us, to put this on Schedule 1, line 3. So we're going to go back to Schedule 1, line 3, and that is the 2328. Goes there. Okay. And it also says to put it on Schedule SE, line 2. However, if there's a loss, which this was for a profit, you have to put it on Schedule SE, line 2. We have a loss, so we follow this here. We checked our box. We put it on Schedule 1, line 3. And on Schedule SE, line 2, if there are other businesses, this wasn't the only business. Since this is the only business, we don't really need a Schedule SE. There's no SE tax if your self-employment income is below 400. And this, of course, is below 0. So there is no self-employment tax. And we don't have to figure out Schedule SE. Okay, so we're going to go back to Schedule 1. We do have one thing that we hadn't put in yet, which is the net operating loss from the first year of business, 2175 net operating loss. And so when we go on to Schedule 1, we're going to have to put that on the same thing on this line 8, which is miscellaneous types of things. So we had gambling income of 22,000, and we had an NOL, net operating loss, of 2175. So I have to take the 22,000 plus the 2175 minus, that's 19,825. Okay, and we're going to combine all of these, the 19,825 and the 2328 subtraction, that's 17,497 total on line 9. And it says to enter that on line 8 of our 1040. Here we go, line 8, 17,497. Okay, so now we can take a look on Schedule 1. Do we have any adjustments? If we would have had net income, we would have had self-employment tax on Schedule SE, and half of it would have been allowed as an adjustment. Okay, we don't have any of these others, so there's no adjustments. All right, line 9, add lines 1, 2B, etc. So all these things on the right-hand side. This is your total income. So it's the 17,497 and 712 of interest and 46,235 of wages is 64,444. 10A is from adjustments. We don't have any of that. Charitable contributions. If you take the standard deduction, you can deduct up to $300 of charitable contributions in cash that you made. So we don't have any of that either. So 10A, B, and C is just blank. Line 11 is adjusted gross income, which is still 64,444. Line 12 is the itemized deductions. They're married filing jointly, so that's 24,800. The QBI, now they do have their own business, so we should take a look at Form 8995. So this is Ken and Amy Booth. And Ken's Social Security 34375 3456. Okay, the name of the business is the disk drive. Okay, and the taxpayer ID number that goes under would be either Amy's Social Security number, but it can also be this employer ID number, 27-149-8567. Okay, and the qualified business income or loss, she had a loss of 2328. Okay, line 2, total qualified business income or loss. If she had more than one business, that would fill out these other lines, and we'd have to add and subtract them all together. And so that's 2328 loss. Then it says qualified business net loss carry forward from the prior year. So we had a net operating loss from the prior year of 2175. So the total qualified business income is combining 2 and 3. So if 0 or less, enter 0. Okay, so we have negative 2328 and negative 2175. So that's going to be extra negative, and so that's below 0. And so we put a 0 there. Line 5, multiply line 4 by 20%. So 0 times 20% is 0. Line 6 through 9, I have told you in past YouTubes not to worry about that. Line 10 is qualified business income deduction before the income line. A limitation. Add lines 5 and 9. Okay, so that is 0. Line 11, taxable income before qualified business income deduction. So that would be our AGI minus our standard deduction. So that's 39,644. Line 12, net capital gain, we don't have any of that. So line 13 is also 39,644. Line 14, we can multiply that times 20%. That's 79.28. Line 15, enter the lesser of 10 or 14. So 10 is 0, 79.28 is 14, and so the lesser of those is 0. Enter this amount on the applicable line of your return, and line 16, total qualified business loss carry forward. Combine lines 2 and 3, okay? If greater than 0, enter 0. Well, this is less than 0. 23.28 loss from this year, and the 21.75 loss carry forward from last year. It's a total of 45.03. Now, when she fills out her QBI for next year, that carry forward would go on line 3 of the 89.95 for next year. That's what's going to carry forward that loss. Okay, so in this case, we have nothing, no QBI deduction. So line 14 is 24,800 plus 0, which is 24,800. And we have 64,444 minus the 24,800 is 39,644 is our taxable income. Okay, now here for our tax, we'll go into our instructions. We'll look up our tax table, 39,644. And this is married filing jointly. So we have right here 4360 is our tax. We don't have any Schedule 2 line 3, so 4360 comes forward. Child tax or credit for other dependents. Remember that there are these 2 other dependents. There's $500 apiece for those. And so that is $1,000. And we can subtract that. That's 3360. Line 21. Oops, sorry. Line 20 is Schedule 3, line 7. We don't have anything for that. That's other non-refundable credits. So line 21, add line 19 and 20. That's $1,000. Line 22, subtract line 21 from 18. So $1,000 subtracted from 4360 is 3360. Other taxes, we don't have any of those. So our total tax on line 24 is 3360. Okay, we had 2850 that was withheld from W-2s. They should have put in more tax. Okay, the business should have put in quarterly estimated tax payments, but it does not appear that they did that. The only things we got left here that we hadn't talked about is they had a reimbursement from an auto accident of $500, so insurance proceeds replacing something you lost are not taxable. A $2,000 gift from Amy's Uncle George, that also a gift is not taxable. So we have nothing else here. So our total payments then is $28.50. And line 26, if the business had paid estimated tax payments, that would be on line 26. Okay, but we didn't have any. There's no extra credits, refundable credits. And so we go down to line 33 and our total payments are $28.50. Now we see that our total tax is $33.60 and